Ladies and gentlemen, good day and welcome to the conference call of Garden Reach Shipbuilders and Engineers Limited, arranged by Concept Investor Relations to discuss its Q4 and FY26 results. We have with us today Commodore P.R. Hari, Indian Navy, retired, Chairman and Managing Director, and Shri Niranjan Mukund Bhalerao, Director Finance and CFO, and Shri Sandeep Mahapatra, Company Secretary and Compliance Officer. Please note that this conference will be recorded. I would now like to hand over the floor to Commodore P.R. Hari, Chairman and Managing Director. Thank you, and over to you, sir.
Thank you. Good afternoon, ladies and gentlemen, and a warm welcome to each one of you to the and I welcome each one of you to the conference hall of Garden Reach Shipbuilders to discuss the results for Q4 and financial year ending 31st March 2026. With me here are Shri Niranjan Bhalerao, Director of Finance and Chief Finance Officer, Srimati Aparajita Ghosh, Chief General Manager of Finance, and Shri Sandeep Mahapatra, the Company Secretary. And over the next few minutes, I shall give you a glimpse of our financial performance and thereafter highlight the physical performance that has resulted in the company recording strong numbers during the last financial year. I shall also touch upon the current order book, execution plan for the ongoing projects, orders on the anvil, and the future outlook of the company, including a glimpse of our expansion plans. As I have stated, our financial performance during the quarter and financial year ending 2026 March 31st has been strong, and this has been the result of an equally robust physical performance. During the quarter as well as the year, we have recorded our best ever financial performance. The revenue from operations recorded during the quarter was rupees 2,119 crores, registering a growth of 29% over the last year. And the profit after tax has moved up by 24% from 244 crores to rupees 303 crores. Similarly, the margins have also shown a substantial increase. When we take the full financial year, I'm happy to inform you that we have recorded a revenue from operations of rupees 7,002 crores, registering a growth of 38% over the last financial year. Similarly, our profit after tax has moved up from 527 crores to 748 crores, registering a growth of 42%. So all in all, the financial year has been excellent for us, and so has been the quarter 4. Coming to the physical performance, our core business continues to be shipbuilding. And from the shipbuilding perspective, this again has been the best ever year in the history of the company. We delivered 8 warships to the Indian Navy. And interestingly, 3 of these vessels were delivered on the same day. And this perhaps is the first time in the history of our country. We also launched 1 warship with the keel laying of 19 platforms. These 19, of course, include 13 hybrid ferries that we are building for the government of West Bengal. So 13 ferries plus 6 more platforms. We have done the keel laying during the last year. Coming to the other business vertical, 7 naval surface guns were delivered during the last year, and 4 of these have successfully completed the sea acceptance trials. We also delivered 110 portable steel bridges. As you are aware, we have a Bailey Bridges business vertical, and during the last year, we delivered 110 bridges, including 30 for export. I'm also happy to inform you that the revenue from this particular vertical has touched the 200 plus crores for the first time in the history of that vertical. Also, we have recorded a revenue of over 270 crores from exports. Our current order book stands at rupees 15,324.13 crores. Actually, I'm happy that the order book has dropped below 20,000 crores. In the last 5 years, it's the first time that the order book is dropping below 20,000 crores, and this, in my appreciation, there's an indication that our execution rate has improved. This order book comprised of 9 projects consisting of 39 platforms. The P-70 Alpha project, one more ship is yet to be delivered. The anti-submarine shallow watercraft project, we have 4 ships pending for delivery. 4 next generation offshore patrol vessels, 1 ocean research vessel, 1 acoustic research ship, 2 coastal research vessels, 13 hybrid ferries, 12 multi-purpose vessels, and 1,000-meter cubed dredger. Now coming to the execution plan of these ongoing projects, as I had mentioned, 1 P-17 Alpha ship is yet to be delivered. This ship has already recorded about 74% physical progress of construction, and we intend delivering this ship during the current calendar year. The project is on schedule. Coming to the anti-submarine shallow watercraft project, this is an 8-ship project, and of these 8 ships, 4 have already been delivered, and the remaining 4 ships, 2 of them have touched about 80% physical progress of construction, and the basin trials have been completed, and we are preparing them for the contractor sea trials, and we intend delivering these ships by the mid of the calendar year. The last 2 ships, ships 7 and 8, have touched around 60% physical progress of construction, and we will be delivering these ships during the current financial year, thereby completing this project also. Coming to the next generation offshore petrol vessel project, this is a 4-ship project, and the first of these ships have reached the stage of launch, and the launch of this vessel is planned on 20th of this month. The progress of construction of the remaining 3 ships is also satisfactory, and we intend completing this project during financial year 29. Coming to the other project, the non-defense project, the ocean research vessel, this we are constructing for the Ministry of Earth Sciences, one of their organizations called the NCPOR Goa. This vessel has already undergone about 50% of construction, and the ship is planned for launch during the current calendar year. The acoustic research ship that we are constructing for the DRDO, the ship has touched almost 20% physical progress of construction, and the ferries, the 13 ferries, 6 200 packs and 700 packs ferries, they are on track, and the first 2 ferries of the 100 packs are expected to be launched during May, that is this month, and the next one is planned for launch during the next month. This project shall be completed by the end of the current financial year. Now coming to the 2 export projects, as you are aware, we are executing a project for a German client, the 12-ship multi-purpose vessel project. The keel laying, that is one of the project milestones of 3 of the ships have already been completed, and the project is on track as of now. And the last project, the project that we are executing for the government of Bangladesh, a dredger project on track, and we intend launching this vessel during the current financial year. This in a nutshell gives you the execution plan for the orders in hand. Now coming to what is on the anvil. The orders on the anvil, as you are aware, that we are the L1 for the next generation corvette project. The price negotiations have already been completed, and we are awaiting the formal signing of contract. The date is not fixed. It could happen any of these days. The order value is to the tune of around 33,000 crores. Currently, 3 tenders are live. One for the Indian Navy and 2 for the Indian Coast Guard. The multi-purpose vessel project, 2 of these ships, the tender is already out. We expect the order value to be to the tune of around 1,500 crores. And the next generation offshore patrol vessels for the Indian Coast Guard, 5 of these vessels, again the order value is to the tune of around 2,000 crores, and 22 interceptor boats for the Indian Coast Guard again. The order value is likely to the tune of about 1,000 crores. In addition, 3 projects where we expect the RFPs to come out in the next 3 months. 120 fast interceptor craft project for the Indian Navy. The order value is to the tune of around 3,500 crores. The 31 follow-on waterjet FAC project again for the Indian Navy, about 3,500 crores, and 7 P-17 Bravo ships. The AON cost, the AON, as you are aware, has already been accorded. We expect the RFP to come out in the next 3 months, and the order value is likely to the tune of around 70,000 crores. This is in addition to the 12 mine countermeasure vessels, the MCMB project again for the Indian Navy. The AON value is around 32,000 crores, and 4 landing platform dock LPDs. The order value is likely to the tune of around 35,000 crores. I have not included the next generation destroyers or any other projects which are yet to get to the AON status. These are the projects. What I've listed out are only the projects where AON has been accorded, and as we appreciate the first 3 projects, that is the 120 FIC, 31 follow-on waterjet FAC, and the 7 P-17 Bravo, we expect the RFP to come out in the next 3 months, and other 2 projects, the mine countermeasure vessel and the landing platform dock, most likely during the current financial year. And this, so the total estimated order value is to the tune of about 150,000 crores, excluding, of course, the NGC project. In addition, what we had been discussing earlier, the aggregated demand of the domestic requirement of commercial vessels aggregated by the Ministry of Shipping. Now it has gained traction, and 4 tenders are live. 4 platform support vessels. The cost could be to the tune of around 1,200 to 1,500 crores. 4 MR tankers, 6 very large gas carriers, VLGC, and 6 Afromax vessels. So these tenders are live, and definitely we would be taking part in these tenders. This in a nutshell gives you the visibility on the opportunities that are currently available. Coming to our expansion plans, as I had stated before, our expansion plans are on the right track, and just to give you the perspective, our current shipbuilding capacity is for construction of 28 platforms, and with the ongoing expansion projects, that is the modernization projects within our premises, this capacity will get increased to 32 ships by the end of the calendar year. And the projects that we have taken on for expansion is for creation of 2 brownfield shipbuilding facilities in West Bengal and 2 greenfield shipbuilding facilities, one in West Bengal and one in Gujarat. What we envisage is with the revitalization package for shipbuilding that has been promulgated by the government, which is to the tune of around 69,725 crores, and the demand for platforms that has already been aggregated by the Ministry of Shipping, we expect the commercial shipbuilding segment to take gather momentum, and it is with this intent that we are expanding to increase our shipbuilding capacity. So I have broadly given you a glimpse of our financial performance and how the strong physical performance during the last year has resulted in this financial results. Given you a glimpse of the order book, the execution plan, the orders on the anvil, and also touched upon the expansion plans. I have finished, ladies and gentlemen, and you may like to ask any questions as appropriate. The moderator may take on, please.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Amit Dixit from GS Investments. Please go ahead.
Yeah, hi. Good afternoon, everyone, and thanks for the opportunity. First of all, congratulations for a very robust quarter and the year, sir. Couple of questions from my side. The first one is on, if I go through the statutory committee of defense reports, then something very striking that if you look at the summary of contracts that are expected to be signed over the next 2 years, these have gone down substantially. In the last report, it was around 42,000 crores. In the report released in March, it is only 18,900 crores approximately for warships and survey vessels, that particular category. So in that light, just wanted to understand that how do we look at, the focus of the government in the near term on these warships and survey vessels. That is our core area. So that is the first question.
Thank you, Mr. Amit. Now, when the figure of 18,900 crores has been allotted for shipbuilding, defense shipbuilding, in my position, that is the fund outflow during the particular year. But as you are aware that government, including during the last year, perhaps even during the last Defence Acquisition Council, have given a green signal for multiple projects, what I had listed out earlier. So the government focus on warship building is very much there, and it is evident from the fact that the AON is being accorded and the RFPs are being promulgated on time by both the major end users, that is the Navy and the Coast Guard. And also the fact that these RFPs are getting translated into contracts. That's why my first statement was that the NGC project is live and we are the L1. And the value itself is to the tune of 33,000 crores only for us. So this figure what you have mentioned is perhaps the fund outflow that is anticipated from these projects during a particular financial year. And that depends upon the project maturity. Now, another aspect is that both the services, the Indian Maritime Services, both the Navy and the Coast Guard have absolutely clear roadmap and stated perspective plans, which have been approved by the government. So, to answer your question in a nutshell, the figures what you have stated does not reflect the intent nor the intent of the government nor the progress made in this direction. Thank you.
Great, sir. Very comforting. The second question that I have is, again, taking a step back, it's a very macro kind of question. Considering the current warfare that is there and the TCPR of the government, where there's a lot of focus on autonomous vessels, on drones, on, new age electronics. So where do you think the traditional platforms like, corvettes, and destroyers, stand or stack? Isn't the relevance of these traditional platforms declining? That is part one. Part two is that how GRSE is gearing itself for maybe, these autonomous kind of vehicles or vessels or, some kind of, modern ships or the small ships that are, being increasingly used in modern warfare. So are there some investments that we are kind of, making in that front, or what is your strategy on that? It's a 5-year question, not something that can be done in next year or something. So just wanted your thoughts on this.
Thank you. You're absolutely right that there has been an increased focus on autonomous vessels. What is visible outside is the fact that the current situation brought the focus of the government to the fore. But otherwise, again, the Indian Navy has got and promulgated autonomous roadmap which was promulgated almost 3 years back, even before the current situation escalated to the state where it is now. So it is just that for us, all of us outside the realm of direct warfare, this is coming to focus. Now, even while autonomous platforms, be it subsurface, surface, or aerial, will have been, are being, and will be utilized in a larger manner, larger focus. The conventional platforms would continue to remain because these conventional platforms, one, they provide heavy-duty muscle in terms of armament. Second, they have huge endurance, sometimes endurance to stay more than 3 months at sea. So these conventional platforms would continue to, in my appreciation, and as an experienced individual in this field, conventional platforms of all ranges, be it a fast patrol vessel or be it an aircraft carrier or be it a conventional or a strategic submarine, this trust and their existence will continue to remain. Now coming to GRSE, GRSE had ventured into the autonomous field as late as 3.5 years back, and we started off in all 3 dimensions, what I mentioned, both the subsurface, surface, and aerial. We have successfully developed both the subsurface and the surface versions, and just to inform you that one of our products has been provided to one of the DRDO organizations. We see opportunities here, and we are an integral part of the Make 1 and Make 2 schemes which the government has promulgated, and few cases where for the autonomous underwater vessels, we are very much in the fray. And in the next year, since you asked me what can be the short term and what can be envisaged in the next 5 years, in the short term, what we have developed, we see them gaining, more standing in the domestic market. And in the long term, that is 3 to 5 years, we see the Make projects for the XL, that is extra large autonomous underwater vessel project to take shape. And perhaps in the next 3 to 5 years, we should be able to develop and deliver this project to the customers. So it is moving in the right direction. And as with many of the defense manufacturers of India, we have a separate business vertical on a new technology. So we are focusing on the autonomous platforms, and the next 3 to 5 years, we see this gathering further momentum. Thank you.
Great, sir. Thank you so much, and all the best.
Thank you.
Thank you. Next question is from the line of Harshit Kapadia from Elara Capital. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity and congrats for a very good set of results. A few questions from my side. So first, could you please give us the order book breakup, which you generally give across the ships? That's the first question.
Sure. Thank you, Mr. Harshit. The order book breakup, as I mentioned, the total order book value is 15,324 crores, and about 95% continues to come from shipbuilding. So the shipbuilding orders are to the tune of around 14,730 crores. And within shipbuilding, the P-17 Alpha project has about 5,868 crores remaining, and the anti-submarine shallow water craft about 2,035 crores, and the next generation offshore patrol vessels 3,168 crores. So the warship building orders are to the tune of around 11,361 crores. Coming to the non-defense segment, the ocean research vessel, 749 crores. The coastal research vessels, 2 of them we are doing, 460 crores. The acoustic research ship, 456 crores. The electric ferries, hybrid ferries, 207 crores. The multipurpose vessels, 1,345 crores. And the dredger, about 66 crores remaining. So what is interesting is that the non-defense segment, now we have about 22.5% of our total order book. Thank you.
Understood, sir. Understood. So my second question is, sir, when on the 31st of March, when you reported your provisional revenue figures, and on the result date when you gave out the numbers of revenue, there was a huge delta, as in it was very positive, of course. But what would be the reason for this difference, sir, if you can explain? Because generally, historically, we haven't seen such a huge difference between the provisional number and the actual revenue figure, sir.
Okay, very interesting. But are you happy or not happy?
Of course, sir. Very happy, sir.
Okay. Since you are happy, I'm sure you are keeping track of our progress at the physical milestone. A couple of ships, not couple, 3 ships were delivered on the last day. So the revenue recognition, the liaison with the Navy, all these aspects are going on. That is the reason why we went for a conservative figure. So when all this happened and when we formalized the deliveries and handed over the vessels, the revenue appropriately was realized from these ships, and the total revenue now comes to our best figures of 7,002 crores. Thank you.
Understood, sir. Sir, follow-up question is, sir, on the NGC order, if you remember, sir, the last time when we met, you were very confident that probably we'll be getting this order in the month of March 2026. But today also you mentioned that price negotiations are going on. You're expecting the order to come soon. So where is the hiccup, sir? Where is the delay? And by when do you think the NGC order would come? In addition to this, you also highlighted certain smaller projects like 22 water jets and other smaller size projects. Now, there are 2 winners, or it will be a single winner, if you can highlight?
Okay, thank you. First thing I would like to clarify that the price negotiations are completed. Actually, when we interacted at that stage itself, the price negotiations were completed. They have been completed. We were expecting the contract to be signed by 31st March, because at that point of time, the contract negotiations, the terms and conditions, those aspects were in progress. We very optimistically appreciated that it will get completed by 31st March. Our current assessment is that the contract would be signed during the current quarter, that is Q1. It is moving in the right direction, no red flags so far. Coming to the smaller projects which you mentioned, the first project of multipurpose vessels is a single shipyard. There's only 2 ships are there. The PV project For Coast Guard, 5 ships, again a single shipyard. And the interceptor boats, again, is a single shipyard. But the other projects, the 120 fast interceptor craft and the P-17 Bravo, the fast interceptor craft 120, it will be split between two shipyards, 80 and 40. That is the RFP conditions and likely RFP conditions. And the second project, the P-17 Bravo, again, would be split between two shipyards, that 4 and 3, like the current P-17 Alpha project. The mine countermeasure vessel, the 12-ship project, would be split between two shipyards, 8 and 4, and the landing platform dock, 2 and 2. But these two, the last two projects which I mentioned, are some time off, because I expect the RFPs to come out sometime during the latter half of the current financial year. I think that gives you a broad perspective of the orders in hand, including the breakup plan.
So this is really helpful, and thank you for this insight. Wishing you all the best.
Thank you.
Thank you. Next question is from the line of Bhavya Gandhi from Bajaj Alternative Investment Management Limited. Please proceed.
Yeah, sir. My first question is regarding when can we see the revenue booking for NGC starting, and in the intermittent period you were supposed to have smaller ships where you could contribute to the revenue. So if you can throw some light, how will the revenue numbers look like for the next 2 years?
Thank you. The revenue booking from NGC, if the contract is signed during the current quarter, we expect the booking to happen during the latter half of the next financial year, that is FY28. The second half of FY28, we expect the revenue generation from NGC to commence. And
percentage-wise, if you can just elaborate, how much would be the percentage booking-wise for the first 2 years at least?
See, you have to specifically ask me about NGC?
NGC, yeah, NGC is particular.
Okay, see, you are aware, since we have been interacting over multiple investor analyst meet, that shipbuilding follows an S-curve, which means the initial phase, when the preparatory activities for construction are in progress, the revenue recognition is minimal. Then it picks up as the physical construction starts in terms of block fabrication, the hull fabrication, where the steel and certain outfit items get into the platform. Then comes the next phase, where the steeper phase, where the equipment gets lowered. And as you are aware, around 65% of a ship's cost itself is the equipment. Then the S peters out, it flattens, and the ship is moving towards the delivery. And once delivered, the balance revenue is made. So, considering this aspect, in the first year, assuming again we are signing the contract, assuming that we are signing the contract in the first quarter, we don't plan any revenue recognition during the current year or even during the next half. The next part, what I mentioned, to commence revenue recognition, that will be a very mediocre amount which is coming from the design inputs which lead to the getting the ship ready for construction. The major chunk of the revenue recognition will start from FY29, when the hull construction would have matured and the equipment, at least some part of the equipment comes in. This is what I can say at this moment. Now, currently we have, as I mentioned, we have about 39 platforms under construction. And again, as what I stated during this very interaction, that few of these vessels are in a mature state where the production progress is very good as per the contraction timeline. So we expect that the revenue accrual during the current financial year is going to be very healthy and in line with what we have been seeing during the last 3 or 4 years. And for the next year, that is FY28, if you pad up with the balance projects what are in hand, the NPOPV project, the research vessels and the commercial vessels what we have in hand. And of course, we also expect a reasonable amount of orders which are on the annual coming our way. So naturally, the order book deficit currently is there will be stemmed up by NGC1 and at least 20-25% of the balance what is on the kitty in the kitty. Thank you.
So can we reasonably assume that FY28 will not see dip in terms of revenue, because that's the fair understanding?
No, I did not state that. All I'm telling is that by FY27, the current financial year, a couple of more projects would get completed, and the remaining projects would give us revenue during the next year, FY28.
Okay. And sir, during these 2 years, how should one look at, because you've been guiding for high digit EBITDA margin, while NGC will be in the design phase. So there will be some sort of de-operating leverage also, because your fixed cost will continue to remain elevated. So if you can guide for at least 28, 29, how the EBITDA margins will look like beyond 27.
In case of FY28 and 29, we will try and maintain similar margins. I can only say we'll try and maintain similar margins, because at that point of time, the balance projects which are currently in hand, I'm talking about the OPV project or be it the commercial research vessel projects, they would be getting completed. So we'll try and maintain similar margins during that year also.
Okay. So
and also one second. Also in FY28 and 29, 28 the NGC would start giving us revenue, perhaps maybe to the tune of around 3 to 4 to 5% of the overall project cost, which is substantial. And the next year, when the construction start again, the project will start giving revenue. And I also mentioned that what is coming from NGC in the next financial year second half, from the balance of the projects which are on the anvil. Let us take the P-17 Bravo, where there are only, as of now, again, like the NGC, there are only 4 shipyards. And with our kind of experience and expertise in building these vessels, we stand a very good chance of winning. And it's a very big order. So even if we go by a conservative figure of GRC becoming L2, forget L, even if we become L2, and if the contract follows a similar pattern, exactly 1 year from the time the NGC is getting completed, the revenue recognition from 17 Bravo will commence in FY29. So the deficit or the gap at this moment is not a concern, not a great concern. This is my appreciation.
Right, fair enough, sir. Very elaborate. Thank you so much for a detailed answer, sir. Really appreciate it. Yeah, that's it from my end.
Thank you. Next question is from the line of Ashish Gura from Antique Stock Broking. Please go ahead.
Yeah, sir. This is Sanjeev here. Sir, my question was regarding the margins. So we've done very good margins in FY25 and 26, aided by the write back of the excess provisions that we would have taken on the various major platforms that we are building. So, for the future, should we kind of adjust for these write backs that we received, that we booked, to really look at the sustainable margins for the future, which could be, around 9 to 10%.
Sorry, Mr. Ashish, could you repeat the question, please? Somehow your voice was sounding a bit distorted. Could you please repeat the question?
Yeah, sir, what I was saying was that we did 8.3% EBITDA margin in FY25. Right.
Okay.
Hello. Yeah.
Hello. Please go ahead.
Yeah, sir, what I was saying was that we did 8.3% EBITDA margin in FY25 and then 11.6% in FY26. Now, if we look to maintain margins, then should we adjust for the benefit that we received from the write back that we took in the fourth quarter of FY25 and FY26. Is that the right way to look at, how the margins will, pan out for the next 3-4 years?
See, all I can say, frankly, the question was not clear, purely not because of the thing, but I couldn't decipher properly. The voice is a bit distorted, but what I understand is you are asking about the EBITDA margin trend, what would continue in the current financial year. I can assure you that the current financial year, the margins are going to be similar. I think that's what I understand you asked, because it's not clear.
I was asking that if we adjust for the benefit that we took on account of the provision right back in the fourth quarter of FY25 and FY26, sustainable margins are around maybe 9.5 to 10%. So that is the way margins should work out for the future, or we should go by the current level of around 11.5% margin that we did in FY26?
We will be able to maintain a similar margin. What you said last, we'll be able to maintain similar margins in the coming year, that is the current year.
That is 11.5%.
Approximately, I really can't say the exact, but all I can say at this juncture, because we are only in the first quarter, all I can say is that we should be able to maintain a similar margin.
Okay, that's it. Thank you.
Thank you. Next question is from the line of Raj Shah from Inam. Please go ahead.
Hi, sir. Am I audible?
Yes, please go ahead with your question.
So my first question is regarding the possibility of revenues in F28 from the aftermarket space. Basically, the spares for the platforms that we have delivered in the last 2-3 years, say survey vessels in the earlier frigates that we have delivered. Do you see that spare revenue start throwing up, say, in next 2 years, which could be a way to increase margins?
No, you're mentioning that ships delivered during the last 2 years.
Yes.
What is the question?
Yeah, so for the ships that have been delivered in the last 2 to 3 years, will the spare sales for those ships start reflecting in our numbers in next 2-3 years, which could be a reason for margin upward trajectory?
I frankly didn't question. It's okay. I'll tell you this way: the last 2 years, the ships which were delivered. One, of course, is the P7 Alpha project. We had delivered 2 of the ships. Then survey vessels, we had delivered 4 of them in the last year and the previous last 2 years. And 4 of the anti-submarine watercraft projects. All of these projects are high-value projects, and all the orders for this equipment, that is the spares and equipment, were placed much earlier, and these prices were fixed. So we did not find any escalation coming or any impact. So the margins are intact. They have not been affected by any of the market fluctuations. So I think that is I'm not sure that is the question which you asked, because the question was not clear. But we have been able to maintain good margins from these 3 projects.
Okay. No issues. Got it. Sir, regarding this export market, do you see any new orders that we are eyeing up, or any possibility of orders that will be coming in the next a year or 2?
Yes, definitely yes. Definitely yes, because most of the European ship owners are now looking at India because of 2 reasons. One, their standard destination, that is China, Korea, they're jam-packed with orders. So that is one reason. And the second reason is that they have found that the Indian pricing is affordable for them and competitive for them, and so is the quality of the vessels. So few of the European clients are in dialogue with us, and I am very confident that in the next year or so, we should be able to conclude more contracts for commercial vessels, especially from the European market. So we see opportunity in this segment.
Okay, got it. That's it. Thank you.
Thank you.
Thank you. Thank you.
Next question is from the line of Kavish Parekh from 361 Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. While you did highlight that the order for NGC could be signed sometime in this quarter, could you also share more details on the likely vendor ecosystem for the project, including the potential key suppliers and their respective work shares?
Yes, we are expecting the order for the contract for the NGC to be signed in the current quarter. And for the next projects, that is the 120 FAC, 31 waterjet FAC, and the 17 Bravo projects, we expect the RFPs to come out in the next 3 months. Also, I had mentioned that 3 of the bids are currently live. So the NPV, the bid submission has already taken place, and for the OPV, for the Coast Guard and the interceptor boats, as I appreciate, the bid submission is towards the end of this month or early next month. So, conservative time, if we take for the smaller projects, from the time the bid is open, the contract would get signed within 6 months. And for the large project like P7 Bravo, based on our experience with NGC, it could take up to a year, 9 months to a year.
So, sir, what I was trying to understand is, specific to the NGC program, who would be the key vendors for you for the project? And it would also be helpful if you could share the electronics content within the overall program. So what proportion of the program value could be attributable to electronics, and which major systems would this include? Given Bharat Electronics is likely...
Understood. You are specifically asking about the NGC project with respect to our downstream vendors and... Okay, in the NGC project, about 65% of the overall project cost is for the equipment and systems. And of these 65%, approximately about 55 to 60% is accounted by the electronics, that is the weapon sensors and associated electronics. And the balance, that is around 40 to 45%, comes from the machinery and systems, that is like the propulsion engines, the air conditioning plants and the associated machinery systems, and also the steel which comes. So the electronics, large chunk of the electronics, of course, comes from our sister PSU, the Bharat Electronics. And since the field is competitive, there are a few other Indian OEMs who are in the field. Does it answer your question, or do you want more information? We have already, just for information, we already started discussions with several of the OEMs as part of the preparation for the project. And once the contract is signed, we will be placing the downstream orders. So we expect the first of the downstream orders to be placed within 3 months of signing of the contract, and between 3 to 6. See, here the customer is also involved. Because since it is a big project, weapon-intensive project, the customer is also associated when the technical specifications are finalized. So the majority of the orders will be placed between 3 to 6 months of signing of contract.
This is super helpful, sir. So given that, like you said, BEL will also have a role in this program, fair to assume that once you are able to sign the contract with the customer, the contract with BEL will be signed somewhere around 3 to 5 months, 3 to 6 months odd after your contract signing with the customer. Is that a fair assumption?
Absolutely correct.
Perfect. Thank you so much, sir, and all the very best.
Thank you.
Thank you. Next question is from the line of Harsh Mulchandani from Toro Wealth Managers LLP. Please go ahead.
Thank you for the opportunity. So you discussed that, right now we are seeing good momentum. Even we have inquiries from the European companies because of our pricing advantage. So do we have enough capacities to take large orders from them? And is there a possibility to aim for even higher margins than what we have seen in the current year, which is obviously very good, but because, we are globally competitive and we have good quality also, can we position ourselves as a higher margin player also going forward from the company perspective?
Yes, the opportunities are good. And the current projects we have taken because we wanted an entry into the commercial shipbuilding segment. So when we follow this current order with more orders, definitely we'll be going for projects with higher margin and perhaps with more order value. Just to give you a perspective, the project what we have taken on is multi-purpose vessel, which is a medium size, while we state the order value remaining is around 1,400 to 1,500 crores. If you just take any of the naval projects, be it additional watercraft project, those ships are very small ships, but weapon-intensive ships. And the cost per ship is around 675 crores. So 8 ships, it almost comes to around 5,000, 5,500 crores. So what I'm trying to convey is that while the commercial shipbuilding export market looks attractive, the money and the margins are very much there in warship building. So what I had stated in the beginning of this discussion that about 1,50,000 odd crores of RFPs which are on the anvil. So there is enough in that segment to meet the order book or profitability aspirations of the company. However, the commercial shipbuilding projects which are on the anvil, what we will be looking for is something with definitely with good margin and projects which are attractive, like let us say hybrid platforms or large size vessels with complex propulsion which are challenging as well as attractive. To answer your question in a nutshell, yes, we'll be going in for commercial shipbuilding projects. You can see a few of them coming up in the next year or so with reasonably good margins. Otherwise, we would not go in for any project with low margins, especially when we are concerned with commercial shipbuilding export orders.
Got it. Thank you. And just one more question I had to understand now with the commodities prices increasing, etc. So I'm assuming we would have a arrangement with the clients for cost pass-through, but just wanted to get a sense that how is there any delays in general that we see with respect to these cost pass-ons, or it is these negotiations happen simultaneously on a monthly basis? How does it work on ground?
Thank you. Yes, there is a deviation or the escalation with respect to the cost of commodities. There has been an impact, and so has there been an impact with respect to time. Now, coming to the cost factor, all the projects that we are currently executing, we have factored this and the orders were placed much earlier. So there's no cost escalation with respect to the existing orders that we have for the ongoing projects. The time delays are marginal because what we have seen is that where minor delays with respect to steel or the industrial gas which contribute towards fabrication within the premises, yes, there is a marginal, very, very marginal, insignificant impact which we are able to absorb in the overall scheme of things. For all the new contracts which we are yet to sign or where we are bidding, we will factor this aspect of uncertainty also. In the existing contracts, just to say, all the contracts are fixed price contracts, and so are our orders with our subcontractors or vendors. So there is no impact as well.
Got it. Okay. Thank you.
Thank you.
Thank you. Next question is from the line of Rahil Dasani from MAPL. Please go ahead.
Yeah, hi, I'm audible.
Yes, you are audible. Yes. Please go ahead.
Yeah, good afternoon and thank you for this opportunity. I have a specific question regarding the ASW vessels. Are we still left with some equipment fitment on our vessels, the ones that we have commercialized, especially as I believe without complete fitment post-delivery, we don't get the PPGS amount back, which I believe is some 10%. And from what I know, we were left with a sonar installment.
Can you repeat, please? I didn't get the question. Which project?
Yeah, ASW vessels, the anti-submarine warfare vessels. The few that we have commercialized and that are in the water as of date. I believe that without fitment of all the equipment on it, usually the government doesn't give us the PBGS amount, which is usually 10% of the whole tender, if I'm not wrong. And from what I know, we were left with the installment of the sonars on those vessels.
Okay. Since you asked a specific question, I'll try and give a very clear answer. The stage payments for the naval projects as per the DAP, that is the Defense Acquisition Procedure, are absolutely clear. These are covered in 15 stages of payment, with the 14th stage coming at the time of delivery and the 15th stage, that is the final stage, coming after 1 year of warranty. And to answer your question with respect to sonar, there are two types of sonar in the ship. One is the fixed sonar, hull-mounted sonar, which has already been installed, and the variable depth sonar, it is a developmental item. It's a buyer-furnished item. So we are not impacted by the non-availability or availability of that item. What I'm trying to say, there is no financial impact with respect to the bank guarantees or PBA, the performance bank guarantee.
Got it. That's very clear. And from what I understand, it's in the development phase maybe, and we haven't installed it yet, and hence, but there is still no financial liability or anything of the sort, right?
Absolutely.
Got it. And with the upcoming NGC and the NGOPV, do they also have a similar sonar profile to the ASW, both surface as well as underwater sonar?
No, this is confidential information. You're asking me the weapon fit of a naval platform. You may like to approach,
Got it. But maybe if you can share at what stage of development is this sonar that we have to still work on, or do we see that getting further delayed?
This particular question, I would suggest you get in touch with the company secretary, which will provide. Thank you.
Thank you.
Thank you. Next question is from the line of Sunil Shah from Sri PMS. Please go ahead.
Yeah, sir, thanks for the opportunity. Sir, I missed a few points early on, and what I understand is that the P-17 Bravo is broken up between 4 and 7. There are other two big ticket size orders which you mentioned, the 32,000 crores and the 35,000 crores. I believe those order announcements could be scheduled in FY28. Sir, the order and the breakup, could you kindly just repeat it for me, please? I just missed that. So,
thank you, Mr. Shah. The P-17 Bravo, the total number of ships is 7. And as per the AON accorded by the Defense Acquisition Council, this is the open source information. The project will be split between two shipyards, that is 4 and 3. The L1 will get 4 and the L2 will get 3. Coming to the next two projects, that is the mine countermeasure vessel project. It's a 12-ship project. The ON value is around 32,000 crores, and it will be split between two shipyards. First, L1 shipyard getting 8 and the L2 shipyard getting 4. Coming to the LPD project, the order, AON, as my memory goes, it is around 35,000 crores, and it will be 2 plus 2. That's where these are the big ticket items, what I mentioned.
Right. So thanks for sharing this. And this could be expected by FY28. So, sir, my context is with your tenure. So, would we all hear this great news whenever it fructifies from your kind self in FY28 itself, or how does it work? I just want to know that, sir.
First part I will answer. The second part you may have to ask again. The first part, we expect the RFP for P-17 Bravo to come out in the current quarter, and the RFP for the other two projects could come by end of the financial year. So if the RFP for the P-17 Bravo comes by first quarter, then the contract could be signed as early as end of the current financial year, that is FY27 end, going by the NGC trend, and the other two projects in the next financial year.
Yeah. Sir, about your tenure in the organization, sir, more than the orders. So you are there in this financial year as well as the next financial year, or the pattern would be for someone else? That's my question, sir.
I actually didn't get.
Sir, your tenure, your post in the organization, so you will be associated with Garden Reach even in FY27 and in FY28 as well?
Yes, definitely yes.
Definitely.
That's my opinion.
Thanks. Thank you so much, sir. Thanks for all that. Thank you.
Thank you. Ladies and gentlemen, we will take this as the last question for the day. I now hand the conference over to the management for the closing comments.
Thank you. And thank you, Concept, for arranging this conference. It was an interesting session. And we had few interesting queries during the session. And as usual, I look forward to the investors and the analysts meet and looking forward to interacting with you all after we announce the results for the next, that is for Q1 FY27. Thank you.
Thank you, sir. On behalf of Garden Reach Shipbuilders and Engineers Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.